Hey, what's going on, guys? Leo. So, wow, we had quite a bit of volatility over the night. I did not expect that we would go down as low as we did, but it seems like to me that everything has... It feels like we bottomed off. So we're going to get into that a little bit later in the video, but we have some really interesting news coming out about Fidelity and also something I want to show y'all with BlackRock before we get into all of that. So let's go ahead and dive in here. So Fidelity's coming out and they're saying that they're going to start doing staking with their ETF. Now, this is a huge, huge deal because investors of all kinds, whether you're institutional or you're just a little home investor that is running their own little, IRA or whatnot, they love dividends. And staking Ethereum, this staked ETH ETF, is effectively a dividend type stock. So now you have a store value asset that is able to pay you a 3% dividend. So this is a really big deal. It's going to attract a whole lot of interest whenever BlackRock or Fidelity come out and they try to pitch this to their investors. Now, BlackRock hasn't filed yet, but they're gonna come. I mean, they're the biggest their biggest competitor right now in the Bitcoin Ethereum ETFs is Fidelity, so they're not going to allow Fidelity to start staking, and they don't do it. So I expect here in the next couple of days we'll see BlackRock come out with their ETH staked filing. So now here is BlackRock's pitch to investors about Ethereum, and I thought this was really interesting. So it talks about stable coins, and we've talked about that a lot on the channel. They talk about how it's a payment system for settlement, cross-border transactions, and then they kind of get into talking about the decentralized finance and how that appeals to it, how that drives value with trading, borrowing, lending, derivatives. I talk about how I think that we're going to see a lot of these mainstream traditional finance institutions like Wells Fargo, JP Morgan Chase. They're just going to move into DeFi. They aren't going to die. They're going to evolve along with, just like banks evolved with the internet. This is no different. They're going to evolve into decentralized finance. And then they talk about the tokenized assets portion of it. So, treasuries, private credit, real estate, stocks, bonds, list goes on and on as far as what can be tokenized onto Ethereum. But what's most interesting in this is what they don't tell you. So if you think back to the early internet days, a lot of people, when the internet was first coming out, people would say, hey, we're going to put businesses on the internet. And people looked at them and they were crazy. They're like, what are you talking about? Businesses aren't going to list on the internet. And at that time, nobody foresaw all the potential use cases for the internet back then. Nobody in their wildest dreams thought about building cryptocurrencies. Nobody thought about you would have stocks trading on the internet. Nobody thought that you would have digital forms of books. Nobody thought that you would have e-commerce, social media. None of those things were even a glimmer of a dream in somebody's mind. So my point being is that the biggest drivers of Ethereum's value are probably not even discovered yet. So just something kind of interesting to think about there. So moving on here. So Senator Cynthia Lummis introduces the Bitcoin Act bill. So then they're proposing to buy 1 million Bitcoin over the course of the next 5 years with a 20-year minimum hold period. So this is really interesting. I talked about in other videos how even though the Bitcoin Strategic Reserve was created, the president doesn't actually have authority to spend money. That's Congress's job. So what this bill could actually do is this would essentially fund the purchasing of Bitcoin in the reserve if it's approved by Congress. Now, whether this actually goes into law, it would be a big deal, but what's more of a big deal to me is that the fact they created the reserve, because now it's said on a global scale that, hey, this asset has merit, it has value, and that's why we're seeing all these other more countries popping up out of the woodwork saying, hey, we're starting our own reserve, we're buying Bitcoin, we're accepting Ethereum, we're passing new cryptocurrency laws because these other countries don't want to be left behind. So it's almost like it's created a cryptocurrency boom on the global scale because nobody wants to fall behind in an industry that is going to essentially revolutionize the future. So moving on here to something from Whale Insider, they're reporting that Ethereum's Joe Lubin says, so perhaps never been more bullish after the recent shakeout and much needed resets. Not financial advice, of course, but we are either in or approaching an epic setup. And I definitely agree with that. So come over here and look at this chart. Now, I'm not a pattern trader, but it does appear that Ethereum is forming a head and shoulders pattern on the weekly time frame, and this lines up a lot with my analysis, where now, I mean, the chart here, it is the count, the Elliott wave count is not pretty. It is certainly not something that I would put on a painting, but the count is there nonetheless, where you have this 1 2, you have the 3 here, 4, and then you come up for a truncated 5th, meaning that the 5th wave didn't go beyond the 3rd. And so now we've moved down. And so there's 2 options here that I see. Either this is an ABC, or it put in a 1 2 3. We get a pullback for a 4, and we come down for a 5th, and we're putting in some other more complicated correction. I don't think that's the case, because if we take a look at the Bitcoin chart here in a moment, but before we do, that would put the 3rd wave target. So we come in here and we just measure from the bottom up to the top. That would be the 1st wave, coming down to the 2nd. The most likely target for a 3rd wave is going to be 161.8%. So right up there at 21,000, we'll call it 22,000. Now, if we look at the Bitcoin chart, this is where it gets really interesting. We talk about this long-term trend channel that we've been in. Well, if we zoom in here, we can see that price has been rejected pretty hard at the bottom of this support here. You have that bullish divergence we were talking about right at that long-term trend line support, and we're getting a huge bullish candle reversing. So the real trick here would be that we want to get above this 200 daily EMA. So if we can get above that and start trending higher, I would feel very, very confident that this is the reversal and we are going to be off to new highs. Now, I think the catalyst for that is going to be inflation data. So tomorrow in the morning at 8:30 a.m. Eastern time, we have CPI data coming out year over year. They're expecting that it's going to come in at 2.9%. If we undershoot that, there's a very strong chance that the markets will rally. I can almost guarantee you, if we undershoot this, that markets will go up, because that gives the Fed permission to get a little bit more dovish. Maybe we can start seeing rates coming down, which means that risk assets will pump. And if we take a look at the Cleveland Fed, so they're predicting that February's data is to come in at 2.83. So Cleveland Fed is already predicting that it's going to undershoot what the market is expecting rates to come in at. So I have seen it before where even the Cleveland Fed will get it wrong and they will undershoot it. So, I mean, if it comes in at like 2.7, 2.6, anything under the expected forecast of 2.9, I think it's going to be super bullish for markets. I think we're going to see, we could easily see a 2% day on the regular stock market. And so what that might do is, if we look at the next month, so coming in for March's inflation data, they're predicting that it's going to come in at 2.47. So if we undershoot February, there's a really good chance that March might get revised down even lower. So we could very quickly get into a favorable interest rate environment here, where the Fed's like, hey, we're going to start cutting rates because all the uncertainty going on, and we're seeing inflation coming down to our 2% target. And so the market could turn around very quickly here. And what's really interesting about this is the timing. So we're getting the CPI data right whenever we're at this long-term trend line. So, I mean, it's just, I often say they write the news to match the price action. So if tomorrow comes out and we get a good CPI report and the market starts to pump off of this trend line support, well, they just wrote the news to match the price action. So we're just going to keep an eye on that, and I'll do an update tomorrow to let y'all know what's kind of going on with that. Okay, so this is actually really good news. We're just getting some breaking news right now. Unusual Whales is reporting that Ukraine has agreed to an immediate interim 30-day ceasefire, but Russia must agree to the ceasefire first, and the U.S. is immediately lifting the pause on intelligence sharing and will restart security assistance to Ukraine. That's a really big deal. That's like the biggest step towards peace that we've had so far. So hopefully Russia agrees and we get this interim ceasefire, and that can allow us to kind of take baby steps towards an actual peace agreement, and this war and all this horrible destruction can just finally come to an end here. So, that's great news. That says that the market will take a little sigh of relief that things are going to be more stable on a global scale. You know, there's not this World War III uncertainty looming in the background. So this is really, really good news, guys. You know, on the flip side of this, we are getting some bumpiness with Canada. So, you know, Trump imposed tariffs on, I believe it was steel and aluminum today. And then Canada, you know, they're doing the retaliatory tariffs. So the trade wars, it's still there. It's bumpy. Hopefully this comes to a quick resolve. Canadian Prime Minister Carney says he will ensure Canada's response has maximum impact to the United States. So they did mention earlier that they plan to start selling U.S. bonds, and Canada holds about 300 and I believe it was 38 billion worth of U.S. bonds. Now, if they do that, I'm not exactly sure how much of an impact it would have. I guess it would depend how quickly they want to dump bonds. But typically, like if you see a lot of people selling U.S. bonds, you'd see potentially interest rates come up. But they don't have a lot of bonds in the big scheme of things. So I'm not exactly sure what will come of that. I think a lot of this is just like political theater, essentially. Ultimately, what's going to happen is there's going to have to be some sort of negotiation here. You know, you can't just keep raising tariffs over and over and over again. I mean, again, eventually you get to a point where the Canadian economy won't be able to handle it. So whatever needs to be done here as far as negotiating a trade agreement, they need to quickly come together, make that trade agreement, and put this under the rug and just be done with it. You know, the longer this gets prolonged, the worse it's going to be for like Canadian economy and the U.S. economy. So, but more so Canadian because they rely on the United States so heavily for trade. I mean, like I said, 80% of their goods come to the United States, whereas that's not the case for us. So hopefully, and my intuition kind of tells me that this will get resolved quicker than it will later, just because they don't have a lot of negotiation room. Typically, whenever you have a one-sided negotiation thing where one side has a lot more leverage than the other, the not so leveraged side bends the knee very, very quickly. So I think this will come to an end very soon. All right, so I think that's pretty much it for today's video. If anything crazy happens, I'll update y'all in tomorrow's video. But until next time, y'all take care, hit that subscribe button, and I'll talk to y'all soon.